Right now, thousands of people across the United Kingdom are sitting at home completely unaware that the Department for Work and Pensions has quietly rolled out one of the most significant changes to means-tested benefits in decades. And the people most at risk of losing everything, their pension credit, their housing benefit, their council tax reduction, are the very people who have never missed a payment, never filed a false claim, and never done a single thing wrong. This video is for those people. This is the information they should have received through their letterbox, but didn't. So let's talk about what is actually happening, why it is happening right now, and most importantly, what you need to do today to make sure you are not one of the people who wakes up one morning to find their benefits have been stopped, suspended, or demanded back in full. The DWP has been given new legal powers, and they have started using them. Under a program that has been expanding since 2023 and has now entered a far more aggressive phase in 2024 and 2025, the DWP is now able to access your bank account data directly. Not through a court order. Not through a lengthy investigation. Directly, through arrangements with banks and financial institutions, they can now see your account balance, your savings history, and in many cases your transaction patterns. This is not a rumor. This is not something your neighbor made up. This is confirmed government policy written into the Data Protection and Digital Information Bill and built upon earlier powers under the Social Security Administration Fraud Act. The government calls it the Bank Account Data Matching Program. And its stated purpose is to identify people receiving means-tested benefits who hold more money in their accounts than the rules allow. Now, to understand why this matters so deeply to you or to someone you love, you need to understand how means-tested benefits work. Unlike the state pension, which you receive based on your national insurance contributions regardless of what you own, means-tested benefits are given to people who meet a financial need. The system decides whether you qualify based on your income and your capital. Your capital means your savings, investments, and financial assets. And there are hard limits built into the system. If you go above those limits, your benefit is reduced or stopped entirely. Let us talk about those limits in plain language, because the DWP does not always explain this clearly. For pension credit, which is one of the most important benefits for older people in the UK, the capital rules work like this. There is no absolute upper limit above which you are completely excluded, but there is a rule called the tariff income rule. If you have savings above £10,000, the DWP assumes you are generating income from that money, whether you actually are or not. For every £500 you hold above £10,000, they add £1 to your assumed weekly income. So if you have £15,000 in savings, they assume you have an extra £10 per week coming in. If you have £20,000 in savings, that becomes £20 per week in assumed income. This assumed income is then counted against your entitlement and can reduce or eliminate your pension credit entirely. For housing benefit, the rules are even stricter for most people. If you are of working age, the capital limit is a hard cut-off. Above £16,000 in savings and you receive nothing. Between £6,000 and £16,000, the tariff income rule applies. Below £6,000, your savings do not affect your claim at all. For council tax reduction, the rules vary by local council, but most follow a similar structure to housing benefit. And here is the critical part that most people do not fully understand. These limits apply to the total of all your savings and capital combined. That means your current account, your savings account, your ISA, premium bonds, shares, and any other financial assets all count together. Many people genuinely do not realize that their ISA savings or their premium bonds are counted as capital under benefit rules. The DWP does not give you the benefit of that confusion. They apply the rules as they exist, not as you understood them. So what does the new bank checking program actually look for? This is where it becomes very specific and very important to understand. The DWP is primarily looking for three things. First, they are looking for people who have savings above the relevant thresholds and have not declared them. Second, they are looking for people whose savings have increased significantly since they made their original claim, because your circumstances at the time you claimed may be very different from your circumstances today. Third, they are looking for undisclosed income, meaning money coming in regularly that is not being reported. The matching process works by comparing the data the DWP holds on your claim against financial data obtained from banks. When there is a discrepancy, when the data the bank holds does not match what you told the DWP, a flag is raised. That flag triggers a review, and that review can result in your benefits being suspended immediately while the investigation takes place, a demand for repayment of benefits you have already received, a civil penalty, and in serious cases a criminal prosecution for fraud. Now, most people who are caught by this process are not fraudsters. Most of them are people who simply did not know that their savings needed to be reported, did not understand that the rules required them to notify the DWP when their savings changed, or genuinely forgot to update their claim when they received a lump sum, perhaps from an inheritance, a property sale, or a pension pot withdrawal. But the DWP does not distinguish automatically between fraud and error. The first thing you receive is a letter, and that letter can come without any warning at all. Let us talk about the specific situations that are putting people at risk right now. The first situation is inheritance. When a parent or spouse passes away, it is very common for people to receive money they were not expecting. Maybe it is £20,000. Maybe it is £50,000. In the immediate weeks after a bereavement, the last thing on most people's minds is contacting the DWP. But the rules require you to report a change in your capital within a specific timeframe, usually within 1 month for most means-tested benefits. If you do not report it, and the money sits in your account for months while you continue receiving pension credit or housing benefit, you will eventually receive a letter asking for all of that money back. And interest can be added to the overpayment debt. The second situation is redundancy or pension lump sums. If you received a workplace pension as a lump sum when you retired, that money is capital. If it pushed your savings above the threshold and you did not report it, you may now be in a position where the DWP considers you to have been claiming benefits you were not entitled to. The third situation is property. If you own a second property, a buy-to-let, a property abroad, a share in a family home, the value of that property is generally counted as capital. Many people inherited a share in a property and simply did not realize it affected their benefits. The fourth situation, and this one affects a huge number of people, is joint accounts. If you share a bank account with your partner, spouse, or even an adult child, the DWP will look at the total balance of that account. Even if the money belongs equally to both of you, the assessment can count the whole amount or a significant share against your individual claim. Now let us be very clear about something. The DWP checking bank accounts does not automatically mean you will lose your benefits. If your finances are within the rules, you have nothing to fear from the data matching program. The checks are designed to catch undeclared savings, not to punish people who are compliant. But you need to be certain that you are compliant. And that is where this video becomes a real-time action plan rather than just a warning. The first thing you need to do is sit down and calculate your total capital right now. Add up every current account, every savings account, every ISA, every premium bond holding, every investment, and every other financial asset you own. Write it all down. If you are claiming pension credit, compare your total against the £10,000 threshold. If you are claiming housing benefit and you are of working age, compare it against the £6,000 and £16,000 thresholds. If your total is above the threshold that applies to your benefit, you are likely receiving less than you should be, or potentially more than you are entitled to. The second thing you need to do is check when you last reported your savings to the DWP. If your savings have changed significantly since you last reported, even if they have gone down, because going down might entitle you to more benefit, you need to report that change. You can do this by calling the relevant DWP benefit line, by contacting your local council if the benefit is administered locally, or by using the DWP online reporting system if you have access to it. The third thing you need to do is make sure you understand what is and is not counted as capital. As mentioned, premium bonds count. ISAs count. Shares and stocks count. However, your main home does not count. A property you are trying to sell can sometimes be disregarded for a period. A property you or a close relative live in as their main home may also be disregarded. Personal possessions do not count. The rules are more nuanced than most people realize, and there are genuine disregards that could work in your favor if you seek advice. Here is something important that many people overlook entirely. If you have been receiving benefits that you were not entitled to because of undeclared savings, the consequences depend significantly on whether you voluntarily come forward or whether the DWP discovers it through their data matching program. If you come forward voluntarily, before you receive any letter or formal notification, you are in a much stronger position. The DWP has discretion in how it handles voluntary disclosures. Overpayments will still need to be repaid, but the process is generally handled more sympathetically. Civil penalties are less likely. Criminal referrals are extremely rare for voluntary disclosures. If the DWP discovers the discrepancy through data matching and contacts you first, the process is more formal, the penalties are more likely to be applied, and you have less room to negotiate. You can still get advice and representation, and you still have rights throughout the process, but you are starting from a more difficult position. This is why acting now, before any letter arrives, is so critically important. There is one more thing that needs to be said clearly. The data matching program is not going away. In fact, the government has been explicit that it intends to expand it. More banks are being brought into the program. The frequency of checks is increasing. Automated flagging systems are being upgraded. And the government has publicly stated that it expects to recover hundreds of millions of pounds through this program over the coming years. That is not said to frighten you. It is said so that you understand the landscape. The question is not whether the DWP is going to check your account. For many people, it already has. The question is what they will find when they do. If you are fully compliant and your savings are accurately reported, you will receive no letter. Your benefits will continue. The program will simply confirm that your claim is correct and you will never hear anything about it. If there is a discrepancy, you want to be the one who identifies and resolves it, not the DWP. Now let us talk about where to get help, because this is not something you need to navigate alone. Citizens' Advice is one of the best starting points. They have advisors with detailed knowledge of means-tested benefit rules, capital limits, and the DWP's reporting requirements. Their services are free, and you can access them in person at local Citizens' Advice offices, by phone, and in many cases online. Age UK is another excellent resource specifically for older people. They have benefit advisors who understand the pension credit rules in particular and can help you work through whether your current claim is correct. Turn to Us has a free benefits calculator online that can help you understand what you are entitled to based on your current circumstances. It is a useful starting point for understanding how your savings affect your claim before you speak to a professional advisor. Local council welfare teams can also help, especially if your housing benefit or council tax reduction is the benefit you are concerned about. If you have already received a letter from the DWP about an overpayment or a compliance review, you should seek advice before responding. You have the right to challenge decisions, request a mandatory reconsideration, and appeal to an independent tribunal. Many overpayment decisions have been successfully challenged, and many civil penalties have been overturned on appeal. But you need to act within the deadline set out in a letter, usually 1 month from the date of the decision. The DWP bank account checking program is real. The capital rules for means-tested benefits are real. The consequences of unreported savings are real. But knowledge is protection. Understanding the rules, checking your own position, and taking action before you receive a letter is the single most powerful thing you can do to protect your benefits. This video has covered the rules, the risks, the specific situations that are catching people out, and the steps you need to take. Share this with anyone you know who receives pension credit, housing benefit, or any other means-tested benefit. Share it with your family members who may be looking after an elderly parent or relative. The information in this video could genuinely protect someone from losing income they rely on and facing a demand for repayment they cannot afford. If you found this helpful, subscribe for more benefit updates because the rules are changing fast, and staying informed is how you stay protected. Leave a comment below if you have a specific question about how the capital rules apply to your situation. The community here has helped a lot of people find answers, and your question might help someone else too. Stay informed. Stay protected.